There are all sorts of groups that can suddenly work when the Fed starts cutting interest rates, as we've seen over the past month, but some of them require more time to turn around. For example, the smokestack industrials and material stocks take a little longer to make a comeback. Take Nucor, America's biggest and best-run steelmaker. Last night, Nucor reported the market was not impressed. The stock ended up plunging $10 or 6.5% today. That's unfortunate because this company's a great bellwether for the whole material sector. And after what we heard last night, it's clearly going to take some time before these stocks can rebound after one rate cut. Now, Nucor's results weren't exactly a surprise. The company issues rough earnings guidance about 2 weeks before the end of every quarter. That was a month ago. And this time, management pre-announced some disappointing earnings per share figures. Wall Street was looking for $1.73 per share. The management said it was expect more than maybe $1.30 to $1.40, thanks to lower pricing caused by weak demand from a host of end markets like autos, farm equipment, and household appliances. But a funny thing happened after that pre-announcement. It didn't seem to matter to the stock. See, even before we got those numbers, Nucor's stock had already fallen 34% from its highs in April to its lows in mid-September. In fact, some analysts started upgrading the entire steel sector in anticipation of the whole economy getting a boost from the Fed's rate cuts. And that's historically what's happened. Long story short, investors were already circling around this one over a month ago, betting that it was ready to bottom. And, of course, it's not a coincidence that the stock bottomed on September 11th, right before the Fed leaked that we'd likely get a 50 basis point double rate cut. Once we heard that, the stock caught fire. Because who cares about the current quarter when the Fed's about to become our best friend again? Everybody knows the industrials benefit from rate cuts, so they were willing to look past the weakness in the third quarter. But apparently, they're actually not willing to look past weakness in the fourth quarter, which is what we heard about last night. And that's what torpedoed the stock today. It was kind of a rude awakening. See, the headline numbers for the reported quarter were slightly better than expected after last month's hideous pre-announcement. Even though Nucor's business is down substantially year over year, thanks in large part to weak pricing, they still delivered a clean revenue beat. They earned $1.49 per share, 9 cents better than the high end of the pre-announcement, even as it was 2 cents lower than the analysts were expecting. Those third quarter numbers were awful in absolute terms, though. But everybody knew they'd be bad, and nobody let that bother them for the past month. So what changed here? The outlook. Unfortunately, Nucor's guidance for the current quarter was quite disappointing. And management made some grim comments on the conference call. For the fourth quarter especially, Nucor said that its unadjusted earnings per share will be down from the third quarter they just reported, definitely less than $1.05 per share. Their steel mills and their finished product business are being hit by weaker volumes and lower average selling prices still. The only bright spot is the raw materials side of the business, where volumes and pricing are stable while costs are coming down, but it's not enough to move the needle. What's going wrong here? Aside from weakness in key end markets like construction, manufacturing, autos, management called out election uncertainty, geopolitical concerns, product delays, tight lending requirements, and elevated levels of imports for certain steel products. I mean, holy cow, what a parade of horribles. To be fair, Nucor also did call out some potential catalysts that could turn things around, like more rate hikes, more rate cuts, pent-up demand for residential and commercial construction, and an extremely soft landing for the economy. But there's a reason they're potential catalysts and not actual catalysts. It's because they haven't happened yet. Through it all, though, Nucor reaffirmed that they've been navigating economic cycles for 5 decades and emerged stronger every time, and I can tell you that is definitely true. But it's also cold comfort if the fourth quarter is going to be worse than the third quarter. When Nucor held its conference call this morning, it was a bit of a mixed bag. In CEO Leon Topalian's prepared remarks, he explained that, I'm going to quote here, the Federal Reserve's recent actions are a good start, but it will likely take more time, more rate relief, and looser lending conditions before we start to see the flow-through effect in the construction, industrial, and consumer durables market that are so impactful to steel demand, end quote. On the other hand, he called out several markets that do remain quite healthy, including construction related to semiconductor factories, advanced manufacturing facilities, data centers, of course, and institutional buildings. Basically, the Fed is Nucor's friend, but given the nature of the steel business, it takes a few more rate cuts for the friendship to really kind of bond, kick in. Looking into next year and beyond, Topalian pointed to all sorts of things that could turn around things for the steel industry. I agree with him. I think it'll turn. But that doesn't necessarily mean the stock's worth buying on weakness right now. Ultimately, there's a reason the stock plunged 6.5% today. I don't think Nucor's really doing anything wrong at all. I was just hoping we'd see more signs that the material space is turning, especially after all the bottom calls we heard over the past couple of months. But the turn clearly isn't here yet. We probably need more rate cuts before I feel comfortable pounding the table on the steel or the other material stocks. And I got to tell you, I talked to Jeff Marks today. We go back and forth for the club. And I was thinking maybe this is the right time to buy Nucor, but I'm a little more circumspect after listening to that call. Now, if you're willing to look a bit further into the future, then I do think Nucor is worth buying on weakness. However, I'm starting to get a little concerned by this relentless rise in longer-term interest rates ever since the rate cut from the Fed last month. Yesterday, we got conflicting messages from Fed. Mary Daly, president of the San Francisco Fed, she says she doesn't see a reason to stop cutting rates. But then Minneapolis Fed President Neil Kashkari says he favors a slower pace of rate cuts. He's currently a non-voting member, still influential. Personally, I'm confident in the Fed. I believe that they've tamed inflation. However, we might not get true clarity on the rate hike front or cut front until after the election. Both candidates have potentially inflationary policies, but in different ways and to different extents. 2 days after the election, we'll learn the outcome of the next Fed meeting. Might be worth putting Nucor on hold until we know more. That's how I'm approaching it. As much as I would like to tell you to dive into Nucor here because I've loved it so long, even in the 80s when I was at Goldman Sachs, I loved it. But after last night's update, I'm a little less sanguine. The weak quarter wasn't a surprise, but the discouraging guidance for the fourth quarter, that was a surprise. It makes it harder to get behind. So let me give you the bottom line. If I had to decide today, I'd still guess that the Fed keeps cutting, rates come down in 2025, and cyclicals like Nucor and the rest of the materials stocks can be big winners. But you know what? We don't have to decide that today. Given the situation's uncertain, we can keep watching and gathering information for the next couple of weeks. It won't be too late to make a decision on Nucor when we know more about where we're headed. But I am, again, concerned. I know I was premature in thinking it could bottom today. It didn't. I got to wait and see. Jerry in New Jersey. Jerry.
Oh, hi, Jim. My question involves Rio Tinto. It's a stock that I picked up a couple of years ago. He hasn't really been doing too much, and now I'm kind of at a dilemma. Is this something that I want to buy more of, hold on to, or sell it? If I sell it, I could still walk away with a small profit.
Well, I'll tell you, look, it's a good long-term story because it is one of the few. I mean, I was reading about Alcoa today and alumina and how great they're doing with that. There's always one mineral or another that's doing well, but you need to see China be stronger if you're going to own that stock. I don't see China happening. I just don't. They're doing everything they can. It's not working. So in that sense, I'd rather say weak hold. How about that? It's a weak hold for me. Let's go to Adam in Georgia, please. Adam.
Yes, I have Snap-on Tools, SNA. Should I sell or let it ride?
I thought that quarter was aberrant. I do not think that quarter was emblematic of what Snap-on can do. I think that you should hold Snap-on. I am have always been a big believer in the company, and I like small business too. The last quarter, look, it went up big, then started coming back down. As far as I'm concerned, the right approach is that it's at 323. It was at 330. It was a good enough quarter. Hold on to it. It's only at 16 times earnings. I thought it was a really good quarter. Anyway, when it comes down to the material stocks like Nucor, I don't think you have to make a move right now. We can wait a couple of weeks until we know more about what the Fed is doing and where the economy is headed. Much more Mad Money ahead, including my exclusive with Prologis after the REIT slid on a recent earnings report, but that was really a downgrade by Goldman. Now, with new hearing features on the horizon for Apple's AirPods, I'm giving you my take on how big I think it could be for health and technology and Apple itself. Of course, all your calls rapid fire tonight, just in the lightning round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.